We've seen a lot of changes basically over the past couple of weeks. It has been a little bit been busy, putting in a lot of work between the hospital portfolios, and of course doing the day and swing trading. But of course, touching back, did want to do a quick update. As you can see, the portfolio, we're up almost a little over $6,300. But what I really wanted to focus on, of course, the purpose of this portfolio is dividend payments. And as you see, for the month, we've actually generated $164 of basically passive income. A lot of that, of course, is in the way of dividends, either whether they're monthly dividends or quarterly dividends. And so we're currently, like I said, my goal for the end of the year was just to eke out $100. Originally, when I started this portfolio, my goal was passively to put in about $1,000 a month. I started this portfolio. I started this portfolio, if you look back in November, I just put in $200 and really didn't start adding in money, I would say, in a substantial way till probably maybe you could say in February, but I really didn't start ramping it up until about June. And then we really started basically pushing funds into the portfolio. I started doing a little bit of extra work, taking on more private clients, doing a little bit more overtime at the hospital, doing some passive investing, kind of working the portfolio as best I could. And this portfolio is dedicated to passive income for those who are interested in creating a dividend account. My portfolio is fairly diversified. It's got a lot of strong stocks. I mostly primarily invested in a lot of the stocks that were fairly depressed and really didn't put too much into tech. There was a lot of growth involved in tech, but I really didn't want to focus too much necessarily on growth and more on passive income. The reason being is, of course, my goal, if you've been paying attention to everything that's been going on within the country here in the United States, even within the Democratic state of New York, we've seen that we're at a time where the government and your local politicians are really putting a restraint on a lot of freedom that you have. Of course, with things like the coronavirus, for many people who are coming to have a bit more of an understanding that it's not as dangerous as we have been led to believe. And of course, as a nurse, I see this firsthand working in a hospital, working in intensive care units. I've treated coronavirus patients. I've watched my patients, certain patients become intubated. So I see firsthand what's going on from the hospital level, but I also understand things, of course, from the investment level, where we see the pump and dump of things like Pfizer and Moderna with the vaccine news. We've seen a little bit of market manipulation, etc. Things that are going on, of course, with the election, and we'll leave that basically right there. And so, if anything, what I've noticed over the past couple of months is all the more reason where I kind of want to get my finances in order, basically in case, as they say, I need to pull the ripcord, right? If I need to make an exit from the country for whatever reason, we're seeing, if you've been paying attention, they're even trying to basically mandate the vaccine. While not necessarily saying you have to take it, you're forcing you to take it, but basically if you want to leave, travel, or do anything outside of walking out of your apartment, you're basically going to have to take the vaccine. With that said, jumping back into the portfolio, this portfolio, as I said, is primarily revolving around passive income. Currently, I believe my average is about 200 and something. 200, but it's about 200. I think it's about 217 so far. If I do the math on what I'm at percent wise, we're just at about 42K. And basically my portfolio is just at about 7%. So currently, with my current gains, we're generating, if I literally added nothing into the portfolio, we're generating about 2,900, which is about 245 a month in passive income via dividends. Of course, some months will be higher than others, but for the most part, that's basically what I'm currently generating. And the goal, of course, my goal for this year was actually just to get to about $100 a month, and we've surpassed that. As you can see, I'm currently generating about, for this month, which is probably one of my lighter months, I'm generating 164 so far. We're coming towards the end of the month, and I do have a lot of my monthly, like for example, LTC, main, and gain, all those paid towards the end of the month. So I'm going to see a bit of a boost. I'm not sure exactly how much it's going to be. But this is typically a little bit of a lighter month by comparison to what December is going to be, where I'm really going to see a jump in my monthly earnings, in my monthly dividends, basically from this portfolio. And the goal, for, like I said, is for a minimum of I would say 1,500 to 1,800. I'm thinking of pushing it to even further, to getting it to about 4,000 a month. My goal is to get about a 10% return per month in terms of dividends. Currently, I'm generating slightly over 7%. Basically what I'm in, that's basically the goal. Like I said previously, in my portfolio, I have a really solid core of dividends, but I also have a little bit dedicated into finance. If you've been paying attention, and especially into things like Wells Fargo, in my last video, I talked extensively about why I like things like Wells Fargo, XOM JetBlue, and of course Dave & Buster's. And I was talking about allocating at least 10,000 from my portfolio into those four companies. I would divide it up into 2,500 into each company, and I basically have put in, for the most part, most of that money. I already did put in a big chunk into ExxonMobil, as you can see here. Still have a little bit more to go. ExxonMobil has taken up a huge rip. I'm currently up about 14% or so on what I initially put in. And then, of course, I also put money into Wells Fargo. You can see Wells Fargo really doing really well. My other play was, of course, going into JetBlue and Play. So I do have to put a little bit more money into Play. I put a little bit of money into Carnival Cruise. I decided I'm going to basically take everything out of Carnival Cruise, completely remove Carnival, and go all in onto Norwegian, as I feel Norwegian is the better play, mostly because one of the financials, two, they have less debt, but most importantly, as you can see the way the stock chart looks, it looks much more stable by comparison. As you can see, looking at Carnival Cruise, you can basically see the trend that the stock was going. So even though Carnival Cruise did pay a dividend, and yes, this portfolio is primarily dedicated to stocks that at least pay a solid dividend, Carnival Cruise, although I do perceive that it will have some solid gains, I do not feel that it is financially the most stable company. I could be wrong, and I do feel Norwegian is the better choice for me. It's basically the route I'm going. So I'm basically going to put in $2,500 into Norwegian, probably over the next 2 or 3 weeks, while trying to finish out JetBlue and Play. Right, we're seeing a little bit of a pullback, so it might be a little bit of a trading opportunity. I do have a little bit of JetBlue. As you can see, it finally did break out above 13s. For the longest, it had been holding below 13s, but I do see that there is a little bit of resistance, which is why the stock is basically hitting 16 and pulling back. There's a little bit of resistance. Hopefully that gives me enough time to add the funds that I want to before the stock pops up. Dave & Buster's play is also looking very similarly. As you can see, it's starting basically to consolidate, move up, consolidate, and move up. And we do have quite a bit to go where we can fill. As you can see, Dave & Buster's, for the most part, was fairly stable. It looks like about a $40 stock. So we're looking for about 15 points in gain. So hopefully the stock will stay steadily stable. It also did at one point pay a little bit of a dividend, but it's not really what I'm looking for. It is basically kind of like my restaurant play. I basically had these 4 stocks as basically my 10K recovery stocks, with primarily ExxonMobil pays a solid dividend, Wells Fargo pays a little bit of a dividend. But if you actually look back at the history of Wells Fargo, whenever it crashed, like in the 90s and in the crash of the 2000s, where we had the financial crash, during the housing bubble crash, the stock pulled back very hard. But then it rallied very strongly, and not only did the stock make capital gains in terms of share prices going up, but it also made huge increases into their dividend, roughly for about 5 to 8 years, which is why I'm really interested in companies like Wells Fargo. They've had a bit of a problem with some of the shady practices, but all in all, I think that if history repeats itself, even though history, of course, is not a perfect model to play off of, but I'm basically watching kind of history repeat itself again for a third time. So ExxonMobil, most of these stocks are basically about 5 years out, between 5 and 8 years out, that I'm looking to hold these stocks, of course, barring any sort of financial problems within the state. That's basically a quick recap. I did add a little bit of Neo as well as Switchback. Gonna have to wait and see how that plays out. I did add a little bit more into things like Chewy, and I did add more into companies like Chegg. Chegg saw a little bit of a jump today. I've been watching it. It was basically gathering, trading sideways, and it looks like it may compress and then spring to the upside. We're up almost $4, up almost 6% on the day. We might see a little bit of a slingshot. Hopefully, it will give me a little bit more time to basically hold off and add a little bit more funds. I did sell out pretty much close to the top on my Square. Amazon and Nvidia, I didn't really have a lot of money. I think I had about $350 or so dollars, basically between the two. I should say about $350 in each one of them. So I took that $700 out and dumped it into dividend plays or stocks that, of course, that were going to grow a little bit more. And I'm basically going to stick with the two, Apple and Microsoft, in terms of my tech play. Tesla was a little overvalued for me, and Neo is basically the China play, so that gives me a little bit of diversity into the portfolio. And of course, that's basically kind of where the portfolio is at right about now. Oh, so a lot of money went into Gain. Gain has been making some huge moves to the upside. Disgusting. I was really hoping to get about $9,000, get about 900 shares of Gains, because it pays a really solid dividend, and it has made some huge gains, moving almost $2 in the span of about a month and a half. Not even a month from about, what is this, end of October, where it really started making ridiculous gains. And I was like trying not to pay paying too much for it, but I still had about another $4,500 that I wanted to put in it, and I just started, any extra cash I had, I was just basically putting it into Gain, as it pays a really solid dividend. And we're seeing, look at so much movement in this one stock, and if you actually look at it over the history, Gain has made some really solid moves to the upside, and for the most part, as you can see looking back at the chart, it really holds roughly about an $8 value over the course of several years. And I was actually long this stock for 17, 18, and parts of 19, and then sold out. And I should have been paying attention to this during the collapse and just really loaded up on it, because it pays a solid monthly dividend of about 7 cents currently right now. So it's quite a bit of dividend. I think I have, what, 400 shares of it, maybe? Let me see. Yeah, I've got 426 shares. So we'll go 426 times 0.07. So that basically pays me about $30 every month just in that one play. Of course, not even including the capital gains that we're going to make on that. We're currently up about $250 on that. And that will put in a lot of work in terms of adding value to the portfolio month after month after month, that I'll be able to compound over time. And that's basically going to be it for this video. If you have any questions on what I'm doing so far, of course, feel free to leave it in the comment section. If this is your first time here, be sure, of course, to like, comment, and subscribe, and I'll check you out next time. Thanks for watching.